Hi. In this little video, I'm going to give you some insights as to what I've been doing trading Bitcoin against the euro. And if you're not familiar with trading, this will give you some interesting insights to kind of see how it's done and some of the tools traders use, what I've been doing to have some success with it. If you are a trader or maybe learning to trade, there's so many different ways to do this. I'll just give you some ideas as to what I've been doing, and it's pretty simple, really, pretty basic stuff, and it's been successful. So you might find this interesting in either case. So let's just start out with the indicators that I use. If we look at the top segment, we can see that we have several things going on here. We have this orange line, a purple line, and a blue line. And what this represents basically is an exponential moving average. All right, the top line, the orange line, is a faster moving average, and it'll measure so many periods based on the chart that you're using. Right now you can see up here, I'm in the 30-minute chart, so each candle represents a 30-minute period of time. All right, so that works that way. What we see here is when the faster moving average starts to cross over the slower moving average, that gives us an indication of some tendencies. Okay. Then I also have the Bollinger Bands on here. That's the upper and lower bluish line, dark blue line. It kind of gives you a range of what the historical price action has been and the volatility. These little white dots is the parabolic SAR, which is really nothing more than a trend line. So this indicator will give you an idea of the trend. For example, we can see right here we had an upward trend during this whole situation. The parabolic SAR then switched from the bottom to the top, which indicated a small downward trend, which you can see pretty much happened here. Very, very slight, only a couple hours before it switched backwards into an upward trend. Then I look at the volume. Price movement in light volume likely isn't going to carry through. And so this gives you an idea that if there is a quick turnaround in price action, whether that's likely to follow through or not. Heavier volume shows that there's a lot of support for either buying or selling, whatever the case might be. And then at the bottom here we have the MACD, moving average convergence divergence indicator. And what this is three moving averages. All right, the flat line in the center, or in this picture, it looks like the bottom, is the longer moving average. So this would be the 26-period moving average, which is the baseline. And from that, we have a fast moving average at 9 periods, and then a slower moving average at 10 periods. And this will give us an idea of trend activity when the fast moving average again crosses over the slower moving average at an extreme point. All right, so if we're high, as we are in this case, and the fast moving average turns over the slower moving average, this is a fairly good indicator that we could be seeing a reversal in that upward trend. All right, and if we go directly up here, we can see that exactly was the case. I'm going to switch to my crosshair. So yeah, it turned over here, and we can see right about here it did actually start coming down a little bit for a few hours, couple hours. All right, so those are the indicators that I use. Here we have a green circle, a green dot, and this indicates a buy, a position that was a buy for the Bitcoin using euro. All right, so here we bought at 58.40. All right, so let's just follow that through to when we finally sold it. We can see the price action going up for a while and then kind of coming back. 58.40 was the buy. And you can see this red dot, this is where that position sold. Okay, we closed the position. We went from 58.30, we closed it out at 6,800. So that's almost €1,000 gain on that particular order. So what happened then is we got up here, and you could see that in this area we hit the high of 69.90, and the price action was bouncing around. It would not penetrate 69.90, the previous high. So it was bouncing off of resistance, okay, up at that upper level. So the fact that it wouldn't push through that resistance level indicated to me that with that, looking at the MACD, you can see down below that the fast moving average crossed over from a high position, which indicated to me that we're likely going to see a pullback. All right, so I set, at this point, I set a buy position, a limit order to buy, meaning that if the price hits a certain price level, I've got a pending order that will trigger and will buy at that point. So I can set that limit buy order and walk away from it and just let the market go to it if it does, you know, whenever it gets ready. All right, so let's see if we have the pullback. Oh, there it goes. See, pulls back. And there's my limit buy order that I had set when the price action was up here. All right, and this was really a very satisfying trigger point because I just nailed that turnaround point. Look how that order triggered at 67.30 and then immediately turned around and went back up again. I mean, that is fun when it happens that way. It's sometimes rare to nail it just like that. But anyway, it did turn around, went back up, and then I took another position. We see if we go back just a little bit, we can see here that price action was not following through on this upward trend, okay? And indications were, again, look at the MACD down here. It's crossing over. And at this point, volume is fairly strong, okay? Right up in this area. The volume is pretty good. So that indicates to me that it's going to pull back. All right, so I set another limit order to buy at a lower level. And this is where I set it, and you can see the price action did come back, the pullback happened, and I had an additional buy. So now I've got two open long positions. All right. The market continues to go down for a little bit and then reverses. It starts going back up again. Going to try and challenge that resistance level. And you see my sell position where I sold. All right. Again, I was looking at this resistance level. It wasn't penetrating. And so I thought to myself, you know what? I'm going to get out of both of these long positions at a profitable point. And that point was 69.83. So I had a small gain from my previous buy, which was 69.61. Okay, so only about 22 euros on that position. But from 67.10, I had a nice, the average gain on both of those positions, if we combine them, was I think 123 euros, all right, between the two. So both of those closed out positive with a nice average gain between the two. And what happened? Price is going a little bit sideways. Not doing a whole lot. So what I did is I drew out my Fibonacci. These lines, by the way, are the Fibonacci. All right, let me show you how that works. If you don't know about Fibonacci, you need to look it up and study it a little bit. It's really a fascinating subject. Fibonacci was an Italian mathematician who found that certain ratios exist in everything in nature. The curve of a plant, the curve of a leaf, the curve of everything in nature is based on these Fibonacci ratios, and those ratios are used in trading. So how do we use that in trading? Let me click the indicator. What we do is we measure between a low point and a high point. Click on that, and that will give us our Fibonacci retracement levels based on those ratios. So you see 23.6, 38.2, 50%, 61.8. These are all the Fibonacci ratios. All right. So, so here we are looking at price action in this area. I'm looking at the Fibonacci from the previous low to the previous high, right? The low to the high, and then of course there's going to be action in between there. But I was looking at, let's just see. So I set a buy order right here, and that was, let me get my crosshairs again. That was at the 50% retracement level. And I always like to fudge a little bit because sometimes they don't hit exactly, and there's nothing worse than making the exact right call but missing it by just a couple of pips. You knew it was going to happen, but it just missed it by a hair. So I always move it up just a couple of pips to kind of give me a little fudge factor there. So this is where I set my next buy level here. Okay, you see that. And I knew it would come back to this level. I was being a little bit conservative. I wanted to get the sure thing. So I took some cash, I committed it to this order, and then I set another buy level a little bit lower, thinking, well, if it doesn't hit the low buy order, at least I'll have the mid-level one, all right, if it turns around and goes back up. If it does go all the way down and take my lower buy position, then I'm going to have two good positions, okay? So there's my second buy position down here, just on the other side of the 50% Fibonacci, okay? And what happens? Price is now about 69.39, which pretty much break even with the first buy order, and the second buy order is in a profit. Okay, so we're going to wait on this. You can see now volume has been pretty strong, pretty good, and we can see the exponential moving average. This is closing. All right, so this downward trend looks like it's about to reverse based on this exponential moving average. My parabolic SAR now shows an upward trend. My MACD down here is low. It's crossed over, and the alligator mouth is opening up, which indicates a potential upward trend. All right, so we're going to sit this one out and take a look for possible exit points on these two open positions that I have. All right, so far, every call that I've made has been profitable. Thank goodness. And it's kind of fun when you can get the basics down. I mean, it's not rocket science, but you do need to understand, a few things, and you can have a lot of fun with this. So anyway, a few little insights for you. Hope you enjoyed that, learned a couple things, and I will wish you happy trading.